Subscribe to LearnCab and hit the bell icon to get notified.
Today, my dear soldiers, we are going to talk about the concept of trade receivable. Whenever as an auditor, if I am doing audit of a trade receivable, which is also known as debtors or customer account, what are the parameters I will consider while looking into it? Obviously, trade receivable are the money owed by the customers in relation to the whatever credit sales which has been affected to these customers. So whenever any credit sale happens, you get the trade receivable or the customer accounts, or commonly what we call it as debtors. So let us try to understand how as an auditor we will examine the trade receivable account. First of all, my dear soldiers, these are all, the trade receivable is nothing but it's a money owed to the organization by the customer on account of credit sale. That is the first thing. Second thing, my dear soldiers, as I said, credit sale is the most common form by which the trade receivable is created. And further, if suppose say these amounts are not recoverable, then in such case it has to be written off and charged to the P&L account. The write-off and charging to the P&L must be purely based on the proper authorization. Example, sale is made to a customer of say rupees 1 lakh. Customer defaults, does not pay. We make regular follow-up with the customer. He is not responding. He does not want to repay the money. In such case, there is no other choice but the amount has to be written off. There is no other choice that is available, my dear soldiers. So in such case, what happens? The amount stands to be written off. That is one thing. Further, my dear soldiers, we should also have a compliance procedure whereby we check in relation to trade receivable. Now, compliance procedure is nothing but what? The evaluation of internal control. Basically, the process in relation to trade receivable, is it proper or not, that you need to check. So, in this case, not only the sale, also process in relation to the customer account we have to understand. So, what are the various processes? Let us try to understand. The first thing under control is that they are all bona fide sales. These sales are bona fide, they are genuine sales. There is no scope for any dummy sales. That has to be checked. The first and the foremost thing is that whether it is a bona fide sale, that has to be ascertained. And whenever the sale is made, the sale should be made only to an approved customer. So that is why there is a creation of a vendor account. See, not everybody can be the customer of the company. The reason is that when I give credit to these customers, whether they have proper financial background to repay the money within the prescribed time. So are they approved customer? If it is an unapproved customer, if the customer is unknown, the chances of losing money is extremely high. So that is a second process to be followed. Further, there is a proper collection process, because once the sale is made, the timeline is given that okay, the payment should be done within 30 days, it should be done within say 60 days. So whether proper follow-up is done and the collection happens on a regular basis and the sales are properly recorded. Not only sales being made, but now the sales should be properly captured in the accounting system. It can be manual or it can be computerized, but whether the sale is properly captured, that has to be examined. Further, once the debt is created, that is, the customer has to pay the money, that particular debt which is to be received from the customer, it can be eliminated only upon the receipt of the amount. Either customer has to pay the money, or, my dear soldiers, it should be written off based on the proper authority of an official. So it can be written off only based on the proper authority of an official. So that is another important thing that has to be understood. So debt can be eliminated only by receipt of cash or authority of an official. So a responsible official can authorize, okay, write off this amount of debt. Okay, this may not be recoverable. Let us write it off. That is how it is. Then further, and on a regular basis, the accounts and the finance department should regularly review the account receivable account. Okay, why the amount is outstanding, and aging. Aging means from how many days it is outstanding, how many months it is outstanding, that has to be ascertained, and proper follow-up should be done. That is a very, very important thing, that we need to do a proper follow-up of the same. So that is another important thing actually here. So a regular follow-up should be done. That's how we need to understand here. So the review should be done on a regular basis. That is one thing. Aging should be done. And next one, there should be a proper follow-up should be done. This is the thing. So suppose say the customer is not paying. So you should regularly call up the customer, send email, and try to recover the money. Okay, we have made the sale and we are not bothering the customer. That is not correct. So customer pays within due date, it's okay. But the customer does not pay within the due date, then proper action has to be taken in this regard. Then further, my dear soldiers, we need to check the trade receivable in the terms of assertion. The first most important assertion is existence. What are assertions? Assertions, they are the representations made by the management in relation to financial statement, and which are very useful for the auditor to identify any potential misstatement in the items of financial statement. The first item is existence. What is existence? Whether the asset exists as on the balance sheet date. Is it a genuine transaction? Is it a correct transaction? Do the trade receivable account genuinely exist? That we need to ascertain. So first of all, there should be a proper controls to avoid any kind of duplication. Ensure that the bill is not recorded more than once. You record the bill only once. So ensure that bill is recorded only once. So avoid any kind of duplication. Further, automatic recording of the receivable balances. So once the entry is made in the system, ensure that the trade receivable or the account receivable account is properly updated on a regular basis. Further, a regular reconciliation is done in the general ledger account. So what happens? There will be a general ledger. In the general ledger also there will be an account receivable account or a trade receivable account. So regular reconciliation should be done. That's how it is. Okay. See, there will be say hundreds of say customer account, or for example listed companies, they'll have say 1 lakh customer, more than lakh of customer, huge number of customer base they will have. Say some companies, say FMCG companies. In such case what happens? So checking into each and every account becomes a challenge. So there will be a parallel account called GL account, general ledger account, which will be maintained actually. So you need to map the accounts receivable or a trade receivable account with the general ledger. So whether the total of those 100 accounts or 1 lakh accounts, are they matching with the balance in the GL? So GL basically comprises of asset, liability, income and expense ledger accounts. And also period end debts, aging report should be considered. Aging report, I already highlighted that from how many days this amount is outstanding. If it is outstanding from a longer period of time, what steps to be taken? Whether they have to go for litigation. So what steps to be taken has to be ascertained. Okay, so here in these steps we try to ascertain the existence in relation to the trade receivable. And also ensure that make a total calculation of all accounts receivable and trade receivable and trace it to the grand total, and the total should match with the GL. See what happens if for example you will have 100 trade receivable account. So there also in the GL there will be an account receivable which is nothing but a part of trade receivable only. So here you will pass entry into each individual trade receivable account. See for example, we made 200 sales in a day. So 200 sales were made in a day, 100 may be cash and 100 may be to these customers. So these 100 accounts are straight away getting updated. So same entries are also updated in the GL as one single entry. So this entire 200 sales will be added up and booked as one single entry. 100 cash sales will be booked as one cash sale. It is consolidated, it is total, and 100 trade receivable account as taken as one single entry. So that's why the regular reconciliation should be done between the GL and the trade receivable. See, once you pass the entry, you pass the entry once actually here at the month, the day end, like the sales entries are consolidated and also entered into the GL. So parallelly accounts run, and what happens, whatever here in GL, whatever entry I pass only one entry. Here if it is 200 entries, I have to pass 200 entries. That's how it is. So GL will always take a consolidated one single entry. So at the end, we need to do a reconciliation. That's how it is. Okay. So that's why we calculate and trace the balance to the grand total. Further, justify the larger debt amount. So suppose say if any larger debt amount has been written off, why it is written off, and if the amount is outstanding for a longer period of time, why it is outstanding. There has to be a justification. Take example, customer may have financial problems. Because of the financial problem, the customer is not able to settle his accounts. So if any larger debt amounts are outstanding, what is the reason for the same? Try to ascertain that. And also record realization invoice wise. So whatever realization that happens, ensure that it is recorded invoice wise, or otherwise adjust the recovered debt chronologically invoice wise on a FIFO basis. So suppose say there are 5 sales made by the company. Now the customer, if he makes payment invoice wise, well and good, happy. We are very happy with that actually. But if the customer does not make the payment invoice wise, then it becomes an issue. So why the payment is not done on the invoice wise, that has to be ascertained. So what is the reason that the invoice wise settlement is not happening? What is the reason for the same? And the same has to be ascertained actually. So suppose say customer may make payment for 3 invoices in one go, then please follow FIFO basis. Always adjust the first invoice which was raised, then the later. So follow FIFO basis. So there is invoice 1, invoice 2, invoice 3, invoice 4. So adjust the first invoice which was already issued and adjust it in a chronological manner. Date wise you adjust. Means what? The invoice which was issued much more earlier must be adjusted first. Okay, FIFO, first in first out, and not LIFO. And there may be a chance that suppose a customer will say, there will be 5 bills outstanding, customer will say you adjust with the bill number 5, then follow the directions of the customer. Very important procedure to ascertain the existence of the trade receivable is obtaining confirmation from the customer. So asking the customer, please confirm the balance. Whether the amount is actually outstanding or not, we want to know. So is it really outstanding? That we need to ascertain. So confirmation from the customer must be obtained. Now take example, let me give you some examples on existence. You have auditor, you have client, and you have customer. Okay, these are the 3 characters, the auditor, client, and the customer. As I told you, we are checking the existence of the trade receivable. First of all, the customer, he goes to the client's company. Now customer, when he goes to the client's company, so when he enters the client's company, what happens, my dear soldiers? The customer, what he does is that he approaches the client. So they approach the client, okay fine, they said we want goods. So now the goods are sold by the client to the customer, and as I told you, it has to be a bona fide sale and it should be only to an approved customer. So what happens, the sale invoice is generated, it is the generation. So sale is, say for example, of 2 lakhs. So what happens now, it is generated and is given to the accounting system and automatically it gets updated. That's how it is. So it is generated and automatically the accounting system should get updated, and the trade receivable account should be updated on a automatic basis. So this is one thing. Now the sale is made, so what happens, this entry, it goes and captures in the sales ledger account. So it comes and captures the sales ledger account. So there will be a sales ledger account. Okay, that's how it is. So first of all, the client sold the goods to customer, and then invoice is generated. Invoice generated, whether it is posted in the accounting system, and then it is taken into a sales ledger account. Okay, that's how it is. So now, my dear soldiers, ensure that again, suppose say the same invoice is generated. So what happens, it is they are trying to post the same invoice. When the same invoice is posted twice, definitely it has to be rejected. It must be rejected. The system should be rejected. You cannot post the same invoice 2 times. So system should be built in such a manner that, okay, already the invoice is already entered. So that is why we are rejecting from the system. So already the system should highlight that. So the message should come, okay, it is already recorded. So you should not record a sale invoice more than once. Further, my dear soldiers, what happens, again there is a customer. So the customer, my dear soldiers, here comes the auditor. So what auditor will check about the existence? Let me summarize again. As first I told you, it should be a bona fide sale. You should not show some dummy sales or fictitious sales. Sales would have not happened. So like example, in case of Satyam scam, so fictitious sales were shown. Second thing, my dear soldiers, it has to be an approved customer. So whether the customer is approved or not, that you have to examine whether it is an approved customer. And the debts are promptly collected. So there should be a proper follow-up system for collecting. And my dear soldiers, whatever debtors are there, it should be eliminated only upon the receipt of amount from the debtors or the customers, or it should be written off by authorization of a responsible official. And as I also already highlighted, it should be reviewed, aged, and regular follow-up of the same should be done. Okay, this is the summary as far as the controls are concerned. Further, my dear soldiers, so there will be several customers, like say you can have trade receivable 1, trade receivable 2, trade receivable 3, trade receivable 4. There are various customer accounts are there. So as I already highlighted that you may have hundreds of customers. So there will be general ledger. So those details of these customers will always be updated in the general ledger. Okay, so there will be a GL. So GL will contain what, my dear soldiers? Okay, they will also contain the details of various customer account. So now you saw sales ledger, now in the general ledger also it is updated. That's how it is. So this enables that none of the transactions are omitted from being recorded. So here also an entry is made in the general ledger. This becomes a thing. And this general ledger must be reconciled. It should be reconciled with the accounts receivable report. So there will be a customer, say Ram, to whom sale of 50,000 has been made, Rahim 50,000, Richard 50,000. Okay, so the total sale that is made is up to rupees 1.5 lakhs. So you will have an accounts receivable report. This accounts receivable report, my dear soldiers, should be reconciled with the general ledger. So it should be matched with the general ledger. So whether the balances are matching or not. So that is how it is actually here. So ensure that none of the transactions are getting omitted. And also I highlighted that there should be an aging report. Now aging report looks like this. See, there are customers, say Ram and Rahim and Richard. So if you see this, this gives you a better idea, better control over trade receivable. See, Ram outstanding is totally 50,000 and 50,000 is being outstanding. So what happens, less than 25,000, say less than 30 days, 25,000 is outstanding. Rahim, greater than 30 days and up to 90 days, and more than 90 days to 180 days. But when it comes to Richard, the amount is outstanding for more than 180 days to 365 days. That's how it is actually. That's a scenario, my dear soldiers. So now the amount is outstanding. So more than 180 days to 365 days. That's the thing. So Richard has to pay money. So we have to make follow-up with the Richard. Now this is called as aging report. Aging report means, as I told you, that from how many days the amount is outstanding. Okay. See, if you see total amount that is outstanding is 1.5 lakhs. Okay. Okay, what you will understand by this? That's why this aging report enables you that which is the amount outstanding for a longer period of time, that you can always ascertain. Okay, that's the thing. Further, my dear soldiers, let us take up another scenario. So based on general ledger, we will generate an accounts receivable report. There will also be a trade receivable ledger. So a trade receivable report will be generated. So what happens, there should be a proper reconciliation between these two, between the general ledger and the trade receivable ledger. General ledger will contain, like say, it will contain the details. So that has to be matched with the trade receivable ledger. That's how it is. So okay, they are reconciling, there is no difference, there is no issue. So it is matching. So okay, fine, it matches. So Ram's account gets matched, Rahim's account gets matched, and Richard's account also it is matching. So no issue with that. Okay, now take a scenario, entire balances are matching, so there is no problem, it reconciles. But take a scenario, the same case where you have Ram account as per the GL and there is a trade receivable ledger. So separate reports are generated by this ledger. Now if you see Ram's account 50,000 and Ram here in as per the trade receivable report, it is 45,000. Now this balances, my dear soldiers, are not matching. So what is the difference? Why it is not matching? Similarly, if you see Rahim's account, that is also not matching. Or similarly, say Richard's account, that is also not matching. So there may be a scenario like this that it is not matching. So what are these reconciliation differences? Why it is not matching? That has to be ascertained. So these reconciliation differences must be taken into account. Say for example, there may be a sale bill which would have not been recorded in the Ram's account. There may be a situation that Rahim would have made payment but that have not been recorded, or whatever sale which is related to say Ram, it is by mistake recorded in the Rahim's account. So these kind of confusions and mistakes will be there. So that's why if sale is made to Ram but the entry is passed in the Rahim's account, or sale is made to Rahim, it is passed in the Richard's account. So those kind of scenarios must be ascertained. Okay. And now here there are reconciling items. As I told you, you have to reconcile the differences, why there is a differences, that we need to ascertain. And if there are any bad debts, then bad debts has to be written off. You have to write off the bad debt. So if you are following with the customer and the customer is not ready to pay or is not able to pay, then those bad debts also has to be written off. Further, my dear soldiers, so here what is the reason? What is the reason why the matching may not happen? One is that there may be journal entries passed in the general ledger which may bypass the trade receivable account. There may be a possibility of a journal entry being passed to the general ledger. Example, say bad debt. They would have passed the entry of bad debts in the general ledger, but the same effect would have not given in the trade receivable account. That is one thing. There is another reason, my dear soldiers, billing posted to an account other than the trade receivable. So there is a possibility, as I give you an example, that the entry which should go to Ram's account goes to Rahim's account. The entry which has to go to Rahim's account may go to Richard's account. So a wrong account may be taken into consideration for passing the entry. That is why there may be a difference. Okay, there may be a journal entry posting would have been done in the GL but would have not been done in the respective trade receivable account. So there are possibilities like this. Further, my dear soldiers, now take example the receipts. Now receipts, what happens, for the client it is a sales and for the customer it is the payment. The customer makes the payment and the client receives the sale receipts. Okay, 40,000 received, and again second sale 50,000 and they have received the payment towards that, and there is another sale 3 which is being made, so the payment is received regarding that. So what happens, in a chronological manner we follow. So once the sale 1 is made, I receive the money, sale 2 is made, I receive the money, sale 3 is made, I receive the money. So we follow this pattern in a chronological manner, date wise we follow. Now take example of the same situation where what happens, the sale 1 is 40,000 and the sale 2 is 50,000, but the payment done by customer is 80,000. Now these kind of scenario, what will you do? customer has not given an instruction. So in such case, follow FIFO basis, adjust first the sale 1 account. First you make the adjustment of the sale 1 account and then make the adjustment of the sale 2 account. So first do the adjustment of the sale 1 account and next, my dear soldiers, do the adjustment of the sale 2 account. So this is the one thing you need to understand here as far as the payment is concerned. Okay, this is one thing. Okay, so you adjust the sale 1 account and then you adjust the sale 2 account. So here what happens now, the total payment, the total sale made is 90,000, but the payment received is 80,000. See, so that's why if no instructions are given, I cannot first adjust the sale 2 account. So go in a chronological manner, date wise manner. So the balance which is to be received from the customer is now 10,000. Okay, this is one example. So that's how it is actually. Then further, my dear soldiers, direct confirmation procedure. Very, very important part to ascertain the existence is obtaining confirmation from the customer. So first of all, we have to obtain confirmation on the unpaid amount. So we have to employ direct confirmation procedure. What is direct confirmation procedure? Basically what happens, I as an auditor will write a letter. I'll send a request letter, a confirmation request letter to the customer that please confirm the balances. But before you obtain the confirmation, you need to have a permission from the client. You will tell the client, see, I'm trying to obtain the confirmation. Confirmation is nothing but a letter. Confirmation is nothing but what, my dear soldiers? It's a letter, my dear soldiers. So it is in the form of a letter. That's how it is. So we have to employ direct confirmation procedure. That's one thing. Further, my dear soldiers, any non-confirmation from debtors, so that has to be considered. So suppose say if the customer is not responding, in the confirmation, as I already told you, you as an auditor will write a letter to the customer. See, balance in the book is this much. What is the balance in your book? Please give a confirmation. So you need to also ascertain a situation where the customer is not responding. If the customer is not responding, then what are the alternate procedure to be considered? That has to be examined. So what are the valid grounds? Say for example, suppose say the client may request, don't obtain the confirmation, or the debtor may not respond. In such case, you have to ascertain that valid ground why the client is requesting not to obtain the confirmation. There may be a possibility of a case against the client, or the matter may be in the court or under litigation. The moment you say it is in the court or litigation, the balance may not match. That's one thing. And also consider the nature, timing and extent of the audit procedures. So you need to consider the nature, timing and the extent of the audit procedure. So that is the next most important thing that has to be ascertained. So first of all, ascertain the valid grounds for the same. Second thing is that the nature, timing and extent of the audit procedure. So what are the audit procedures that has to be considered? Further, my dear soldiers, understand that date of confirmation. So this is very, very much important actually here. Date of confirmation should always be near the balance sheet date or as on the balance sheet date. That's one thing. You cannot obtain confirmation in the beginning of the year. It will not make sense. Say for example, year ending is March, obtain confirmation as on February or obtain confirmation as on March itself. So ideal will be the date of balance sheet date, or as I told you, any date which is closer to the balance sheet date can also be considered. And the date is decided by the auditor in consultation with the company. So he will have a discussion. Sometimes what happens, if it is a bigger balance, then in such case the auditor will try to obtain confirmation near the balance sheet date, because it makes sense, because he may start the audit procedures much earlier also. So this is how it is. Direct confirmation procedure, my dear soldiers, also the mode of confirmation, whether it should be by email, whether it should be by a letter. So what is a mode of confirmation that has to be ascertained? So there may be two forms of confirmation, that is positive form of request and negative form of request. In positive form of request, we request the customer to respond whether he agrees with the balance or not. In negative form of request, we request the customer to respond to the scenario only if he disagrees with the balance. These are all well covered concept in SA 505 external confirmation. So, my dear soldiers, ensures that the correctness and the proper dispatch of the request letters confirmation. So, basically what happens, my dear soldiers, so they ensure that whatever letter that is being dispatched, that letter, my dear soldiers, you have a proper control over those letter. So, here understand that the auditor will directly contact the customer. You should not obtain confirmation through the client. You have to obtain confirmation only through the customer. That's how it is. And if there are any request letter which are undelivered, ensure that these letters, they directly come to the auditor and not to the client. So, ensure that those letters are returned back to the auditor and not to the client. And if there is any discrepancy, see for example, the client, in the books of the client, the balance is 5 crores. When you obtain a confirmation, the customer may say the balance is say 4 crores. In such case, there is a difference of 1 crore. Why there is a difference? Why there is a discrepancy? That has to be ascertained. Okay. And investigate and reconcile. So, you have to investigate, you have to reconcile. If the balance confirmation which is obtained from the customer shows there is a difference in the books of account. In the books of account, as I said, it is 5 crore. Confirmation says 4 crore. 1 crore, what could be the difference? Why there is a difference? So, there may be a possibility where customer would have dispatched the check. They would have dispatched the check, but the company would have not received the check. So, there may be possibility like this actually. So, you need to go for reconciliation. Okay, why there is a difference, and ensure test to satisfy the correctness of the debt. So, whether the debt is correct or not, that you can always ascertain by looking into the confirmations which you receive from the customer. The customer himself will tell, yeah, yes, I am liable to prepay. Then he is liable to repay, that's it. So, he is openly accepting, he is openly acknowledging that yes, I am liable to pay. So, it shows the genuineness of the transaction. In fact, the existence of the trade receivable, that's what you can ascertain. And if no reply is received, then additional testing is required, which includes what? So, balance of the cash received. So, basically what happens, suppose say we wrote a request letter to the customer and the customer is not at all responding. When the customer is not at all responding, then in such case, my dear soldiers, what happens? We need to ascertain, we have to ascertain what is the balance of the cash which is outstanding. So, that is another important thing actually here. Okay. So, how much balance of the cash is received subsequently from the customer, that you need to check. See for example, as per the balance sheet, customer has to pay 5 crores. He is not responding. So, after balance sheet date, you see that 5 crore is realized from the customer. Oh, the balance is realized after the balance sheet date. That shows the genuineness of the transaction. Further, respective balance to the customer remittances. So, there may be customer remittance advances will be there. A letter may be there from the customer whereby, or a email may be there by my customer where it shows that he has made such and such payment. And it consists of identifiable transactions and confirmation of transaction which has occurred. So, by looking into the customer remittances, we can see what are the transaction which has occurred and whether these transactions are genuine or not. Further, we have to prepare final summary and draw a conclusion. So, final summary as to the trade receivable circularization. Circularization and the external confirmation, they are one and the same. So, obtaining confirmation and circularization. Circularization is another word for obtaining confirmation. They are all one and the same. So, make a final summary of these circularizations of, for example, there are 100 customer accounts. Okay, 95 customer balances are matching, 5 are not matching. Why they are not matching? Try to ascertain the reason to draw the conclusion and ensure that, my dear soldiers, whether the balance is collectible and if any write-off happens, it is written off based on proper authorization, and Basically, my dear soldiers, if the transaction happens with the related party, is it reasonable and is it on an arm's length basis? That's one thing. So if the client makes a sale to a customer who is a relative, who is a related party, in such case, whether the amount is collectible or not, that you have to ascertain, and such sale to the related party must be properly authorized. Take example of a holding company making sale to a subsidiary company. Take example, a company making sale to another company where the director has got substantial interest. And is it on an arm's length basis? Related party transaction. So in such case, because related parties, say for example, brothers and sisters are transacting. So whatever price a brother charges to unrelated party, the same price is you charge the related party, that is his sister. So arm's length basis means there is no differentiation. The same price is also charged to a related party. So there is no difference at all. And we ensure that exclude receivables other than sales or services. So trade receivable should contain either item related to sales or services. Any say receivables, my dear soldiers, that has to be excluded. So that is another thing actually. Then review the trend line of the sales and the accounts receivable. The trend line. Trend line means basically you compare the sales and the accounts receivable over a period of time. Say for example, year 1, year 2, year 3, year 4. So we do a comparison. Say for example, the sale. Now imagine this is sale line. Sale is going up. Sale dropped down. Again it went up. So same way, my dear soldiers, there may be a trade receivable line. Let's say trade receivable line maybe there it may go up that way. So this another line may be like say trade receivable. So try to analyze the reason about the trend. Okay, sale is increasing up to some extent, then again it is coming down a little bit, again it is going up. What is the reason? And the credit sales are nothing but related to the trade receivable. That's how it is. Okay, you have a sale, but you have a huge amount of trade receivable. So what happens? Corresponding to the sale, see what happens, trade receivable is equal to credit sale or services income which is provided, services income which is collected or which is yet to be collected. So that's basically. So what happens, my dear soldiers, that suppose say the trade receivable is much more higher than sale, then immediately it's a problem. Why it is so high? Because sale is a combo of what? Of cash sales and credit sale. That's how it is. Then, so you have to ascertain, inquire the reason for such changes in the trend and ensure that there is a proper documentation for the same. So what is the reason for such changes in the trend? That has to be ascertained actually. So ascertain the reason for such changes. That's another important thing actually. Okay, my dear soldiers, this is all about the direct confirmation procedures. Say take example, let me just summarize this with some graphical thing. Say for example, the client has sold goods worth of 5 crore to the customer. Now here comes the auditor. So what happens? Auditor will contact the customer directly for any unpaid amount. So confirmation should always happen only directly by the auditor. He should directly contact. Otherwise the client has a possibility of influencing the customer. Further, my dear soldiers, ensure that a prior consent for the direct confirmation procedure must be obtained. So you need to obtain a prior consent. So before you obtain a confirmation from the customer, ensure that auditor should contact the client and say, I am obtaining confirmation, you give your permission. So the request the auditor, sometimes the client may request the auditor not to obtain the confirmation, What is the reason? Why? So not to obtain the confirmation. Here this is the more relevant word. So what is the reason actually? So you need to understand the valid ground for the request. Then as I told you, there may be a case of litigation or case may be pending, or you should also consider the nature, extent and timing of the audit procedures in this regard. That is another important thing. So you have to apply alternate audit procedure. As I told you, check for any cash which is realized after the balance sheet date. Further, my dear soldiers, the auditor will send confirmation request letter to the customer, and customer will respond whether balances are matching or not matching. Now these type of confirmation, they are known as positive form of confirmation request. Okay, this is known as positive form of confirmation request, where I contact the customer, I say please respond whether balances are matching or not, you need to check. So the customer will be requested, sir, whether balance is matching or not matching, you respond. This type of confirmation, they are known as what? Positive form of confirmation request. Then the next thing, it could be what, my dear soldiers? There may be a possibility that the auditor will send a request letter to the customer, and customer will respond only if the balances are not agreeing. They are known as what? Negative form of confirmation request. This is the second type, my dear soldiers, which is known as negative form of confirmation request. That's the one thing. So now there is an auditor who sends a request letter. The request letter is sent to the client. That is a first thing. First and the most important thing is that the auditor will send the request letter to the client. That's one thing. And once the request letter is sent to the client that, okay, I want to obtain the confirmation, that is not a proper procedure. And then what happens? The client will send the request letter to the customer. Now that is a very wrong process. So I always highlight that auditor should obtain direct confirmation. See, if he goes to the client and obtain the confirmation, that is not at all acceptable. That is not at all correct, my dear soldiers. That's how it is. So this is the one scenario you need to understand here. So auditor will contact the client, and then the client will contact the customer. That's how it is. Okay. So this is another important thing you need to keep in mind. So this is not a correct thing actually. So auditor should directly contact the customer, but here before he contacts the customer, he has to obtain the permission of the client. See, can I contact, should I contact or not? Please give me your concurrence for this particular purpose. That has to be there. And so the request letter, my dear soldiers, should directly go to the customer, and this request letter are of two types. One is positive form of request letter, second one is negative form of request letter. And then the customer will send the confirmation letter back to the auditor. That's how it is. Okay. So auditor will contact the customer, customer will respond to the auditor. That's how it is. So that's the scenario, my dear soldiers. That's the thing. So auditor will receive the request letter. That's the thing. So now, my dear soldiers, so auditor will get the confirmation from the client. Actually, that's how it is actually. Okay, that's the thing. So now, if the balances are matching or not matching, auditor will check open the books of account, and he will say, okay, balances are matching or not matching. If it is matching, good. If it is not matching, so there will be a confirmation letter which is sent by the customer. It is matched. So it is matched actually. That's the thing. That's our scenario. So if the confirmation letter is there, then in such case, my dear soldiers, that confirmation letter which we received from the customer should be matched with the books of account. Okay, it is matching, well and good. If it is not matching, then what is the reason why it is not matching? So you need to have a discussion with the client and ascertain why the balances are not matching. Now auditor send a confirmation request, but the letter is undelivered. Say for example, address was not there, it was not proper, or the client was not there, or the customer was to give confirmation is not there. So in such case, what happens? The letter stands to be undelivered letter. In this case, the undelivered letter should directly come back to the auditor. It should never go to the client. So we send a request letter to the customer. The customer was not traceable, address was not proper, something. Now, if it is not delivered, it should directly come to the auditor. It should never go to the client. If it goes to the client, what happens? Client may prepare a separate request letter. He may prepare a separate request letter, my dear soldiers, and this is the real problem and real challenge. So he may prepare a separate request letter, and because he prepares a separate request letter, my dear soldiers, so what happens is that this is a real challenge. It's a real challenge altogether. So now here what happens is that the client may prepare one fictitious confirmation as if the same confirmation is received from the customer. So those kind of things should never happen, my dear soldiers. That's how it is. Okay, I hope you are getting the concept actually. So undelivered letter goes to the client, very bad, my dear. Then it's a wrong thing. Then it should not happen actually. And if there are differences, so of whatever confirmation that is obtained, so if there are any discrepancies, say for example, differences are there. So the customer says, no, I have to pay only 4 crores. Here in the books of account, it shows 5 crores. The differences should be reconciled. Okay, why there are differences? And if there is no reply, then ensure that what are the balances of cash which is recovered, that has to be ascertained, and ensure that customer remittance advice is taken into consideration. So there may be customer will make the payment, that remittance advice should be taken into consideration, and detailed analysis of the balance should be done. That is aging, from how many days or months the amount is outstanding. That's how it is. Okay, so these are certain things we need to understand about the direct confirmation procedure. This is all about the existence. And direct confirmation procedure, to supply, understand this thing, that if it is a related party transaction, ensure that this transaction is reasonable and it is on an arm's length basis. And the receivable, so whether the amount is receivable, my dear soldiers, and receivable includes only sales and services. It should not include any other amount. That's one thing. And also, my dear soldiers, see the trend of the sales over a period of time. Trend means you compare the current year sale with the last year sale, compare the current year trade receivable with the last year trade receivable. But trade receivable should include only the credit sale or credit service income. That's it. No other income must be included, my dear soldiers. Okay. With this, my dear soldiers, I complete my discussion on the existence of the trade receivable. I hope you have understood the concept. I'll see you in the next video. Thank you very much, my dear soldiers.
Subscribe to LearnCab and hit the bell icon to get notified.